attention to the market. For that, we're joined by Julia Lee from Bell Direct. Julia, look, firstly, appreciate your patience. Thanks very much. Just to start with, your thoughts on pretty good bounce back today.
It is a good bounce back for the market, and the market has been oversold. I guess just looking short term, and I'm expecting a bounce for the markets, but medium to longer term it does look more challenging, and that's really because of the global outlook. We've already seen those weaker numbers coming through from China, and now we're worrying about Europe as well with the Volkswagen scandal. Volkswagen is the largest employer in Germany, 270,000 employees, and remember, China is Europe's largest trading partner. Europe is China's largest trading partner, and China is Europe's second largest trading partner after the US. So we are watching what's unfolding in terms of global growth expectations very carefully. However, today it was all about the positive nature of the market. The top 20 trading higher. BHP was in the red for most of the session, and that was the only one. But all sectors, all trading higher. There does still tend to be a defensive tilt to the market because it is those sectors with either high yields or defensive cash flows which have outperformed on the market. The property sector was the best performing, and that's typically high yielding, followed by the consumer staples, utilities, telecom, healthcare, all that usually have defensive cash flows. So a defensive tilt to the market, still a little bit of lower volumes coming through with those school holidays, and just watching what was happening around the region as well. Japan was an interesting one coming back online. It was down, its automakers and car makers playing a little bit of catch up, so that really dragging the market lower. But China was higher, and HSBC coming out to say that it thinks that the worst is now behind us. So altogether, lots happening around the region, but for Australia, it was a good day.
Mike, get your thoughts on this, where people could be looking to potentially buy. I mean, what do you see as good opportunities out there at the moment?
Well, there are a number of themes that are quite popular at the moment. We know that it is difficult to find growth in this low growth environment. So any of those companies with both price as well as earnings momentum have been doing extremely well. The problem here is that they have run very hard and they're looking expensive. So these are companies like IPH, like TPG Telecom, Blackmores, Bellamy's, as well as Capilano Honey. These are stocks with momentum in terms of earnings and in terms of price, but unfortunately what we have seen is that they've been running hard for a long time, so they are starting to look pretty expensive, and they have looked expensive for a while. The other thing that you could pursue is that most things on the market tend to move in cycles, so you could pursue the cyclical theme. And I guess looking at the cyclical theme, one of the things we are expecting is for consumer confidence to continue to see strength now that we've seen a little bit more stability. Now we've seen a change in the leadership, and there won't be that leadership speculation anymore. And typically one area that does do well from that lift in consumer confidence are discretionary retailers. One stock that I'm revisiting at the moment is Myer. It's around about 82 cents at the moment. Lots of shorts in there as well. But remember, this is also a company that has been approached a number of times before. Back in 2006, when it was Coles Myer, it was approached by KKR, and we could see private equity once again looking through the stock, or even Premier Investments, which of course has been doing quite well from an equity performance point of view. And I guess it would be good timing to launch an equity type of bid when the share price of Premier has been doing well and Myer hasn't been doing so well. The other area, I guess, is that's quite cyclical, are milk prices. And one of the things that we saw in the market today is that the New Zealand dollar did see some strength on the back of expectations that the milk price has bottomed out. So stocks like Bega Cheese, A2 Milk, they would be beneficiaries of an uptick in terms of and a bottoming out in terms of milk prices. And on the flip side, one of the areas that I'd probably be avoiding at the moment, or even come close to shorting at the moment, are probably the home builders, which are looking pretty close to a peak over the next 6 to 12 months. So I guess some ideas there. In terms of what people are looking for on the market at the moment, they're probably looking for growth, but growth has run very hard and everyone's running after the same stocks at the moment because it's hard to find. But also just having a look at some of those cycles, and they do look pretty close to turning, and that provides some investment opportunities as well.
Mike, any thoughts